ladies and gentlemen, to Business Today Television. I'm your host, Shail Bhatnagar. A very good morning to you and a very warm welcome to what is looking to be a skittish day as far as markets are concerned. We've had a very sharp rally. This is the beginning of May's F&O expiry. April and March have turned out to be fantastic for long side traders. We've made 11% at least on the Nifty. The Bank Nifty and the Fin Nifty have hit record highs. And for the way forward, let us speak to Mr. Ashish Chaturmota, Executive Director and Fund Manager at JM Financial Services, a very long-term watcher of the market, a key stock picker, and a very well-known voice in the market. Namaste Ashish ji, a very warm welcome to you, sir. A fantastic April and a phenomenal March. How does May look to you? What are the changes that you are expecting in the market, and how do you read sentiment on the Lal Street?
Good morning, Shalji. Thank you for inviting me on this show. So as far as markets are concerned, we have seen some very good rally in the last couple of weeks. And in fact, March was a good month, specifically if you look at into banking and financial as a space, which has significantly outperformed, the broader market. And that too, this space was underperforming since last 2021. So almost 4 years of underperformance in banking and financial has started seeing some strong traction, specifically after RBI's action, whether it's respect to rate cut, repo rate cut, or maybe we have done some open market operations, which has led to almost 3.5 lakh, 4 lakh crore kind of liquidity getting infused into the system, and obviously reducing risk weights, which has helped NBFCs in the overall lending environment. So all put together has really helped the overall banking and financial space to do well. I believe that going forward also this space will continue to do well, although some profit booking in last couple of trading sessions. But I think this is going to be a buy and dip strategy for the overall banking and financial services space. Apart from that, we have seen some serious traction coming into the capital markets theme. So whether stocks like BSC, MCX, or maybe the asset management companies, we are seeing some good traction coming back to this space, clearly indicative of the rally which we have witnessed in the broader market. So I think that capital market as a theme will continue to do well. Financialization of savings is going to be a decadal theme. So any dip in this space would be opportunity where I think a lot of interest could be seen. So this is one space which looks good to us. And then in the manufacturing space, we believe defense is going to be a good opportunity because we have seen good capital outlay in the budget. And in the last 1 month or so, we have seen good amount of order book positions getting built up for a lot of defense companies, whether it's Mazgaon Dock, Bharat Dynamics, or BEL. So put together, I think overall defense is is going to continue to do well. As far as disclosure is concerned, a lot of these stocks we have discussed or sector we have discussed, we have good exposure in our portfolios at Apex, and we continue to hold these names in our portfolio.
Right. Ashiji, you would be particularly happy with the rally that we have seen in Bank Nifty, in particular Financial Nifty as well. Both these stocks are at both these indices have hit record highs. In the larger scheme of things, do you think 2025 will see a record high for the Nifty too, or is this expecting a lot?
No, I don't think so. It's expecting a lot because we need to see the index, constituents. And if we see that almost 37% weight of Nifty is typically being held by, BFSI as a space. And that space has already seen a fresh all-time high. So there's going to be a continued leadership position being held by entire BFSI as a space. After, some tepid 2-3 quarters of capex numbers or capex execution at a lower end, we believe that on a monthly side, 95,000 crore kind of capex, central government capex is going to be done, and which is going to be good for overall manufacturing as a space. So I think even cement, which plays a very crucial role in the overall manufacturing space, is going to do well, and this is getting reflected in the behavior or price behavior of a lot of cement companies, whether it's Ultratech or JK Cement or Dalmia Bharat. So clearly, I think this is one space which is also looking quite promising. We have already seen a good amount of profit booking in the IT as a space, but in the last 3-4 days, we are seeing reasonable recovery coming into IT post the numbers coming out of large cap IT names. So clearly, I don't see significant drawdown or downside coming into IT. And then pharma and healthcare is one space which is showing very good strength. So if you look at a lot of these sectors, individual sectors are showing very good amount of strength. And keeping that in mind, my sense is 23,500 is going to act as a very important support for the market. If we don't see a breach below this 23,500, even on the kind of uncertainty which we have in the last 2-3 trading sessions, then I think there's a very good possibility we might inch up towards fresh all-time high as far as Nifty is concerned.
Okay, so that's a view that is coming in as far as the rest of 2025 is concerned. Ashish ji, in the portfolio that you manage, what are the changes that have occurred in the last 10 days or in the last maybe fortnight? What have you added into, and anything that you may have subtracted given the very sharp rally in prices?
Sure. So, Shelji, in terms of defense, we have added some defense names. For example, a stock like Solar Industries, we have added in our portfolio. We believe that this has almost got 25% kind of market share in the explosives segment. In terms of, the defense opportunity is going to increase, and we are going to see the 12% business, which is currently being done by defense as a space, is going to go to almost 20%. So there is going to be a lot of indigenization as theme, which is going to work. So overall, I think this is one stock which we have added as a structural long-term bet in our portfolio. Apart from that, we have added some defensives in the form of healthcare. So we have added hospital names like Apollo Hospital is something which we have added very recently. Medanta is something we continue to hold in our portfolio. So we are a little overweight at this point of time in the healthcare space. Also, the CDMO opportunity is looking very promising. So within that, stocks like Divi's Lab, Laurus Lab, or something like Piramal Pharma is something which we continue to hold, and we have added some more positions into it. But yes, we have reduced some exposure in the small and mid cap and increased allocation towards large cap, private banks, financials, capital markets theme. So that's how the position is being built up. And I think the overall weight of, I would say, large caps have increased in the portfolio, because we believe that in this kind of uncertain environment, large caps tend to perform very well, and that's what positioning we have done in our portfolio as well.
Fair point. So that's the broader theme: positive on large caps versus mids and smalls. Defense, in particular, solar industries. Within the hospital sector, it's Apollo Hospitals, and of course, you like Divi's and Laurus in the pharma space. Ashish ji, have you hunted on the IT sector as well? This was a 34% correction on the main index. Is this something that you find attractive at current levels, or are you staying away?
So honestly speaking, we are staying away, except for stock like Persistent, which is an outlier in terms of its performance. The kind of top line growth or profit growth, or the kind of EBIT margins which Persistent has been maintaining is clearly indicating its leadership position. So this is one stock which we are holding within the IT space. Otherwise, we are significantly underweight at this point of time on IT as a space. We continue to believe that domestic theme, domestic manufacturing, domestic consumption is something which is going to outperform in 2025. And within that, even banking financial as a space is going to take the leadership position. IT is going to be more of a short-term pullback trade. So rather than, because we don't believe that the discretionary IT spend is going to go up significantly. So except names like Persistent, or maybe to some extent stocks like Coforge, where we have seen good amount of performance from a financial parameters. Otherwise, we believe that mostly it is going to be a laggard. So we are a little underweight at this point of time on the overall IT.
Okay. The persistence of persistent persists as far as good quality stock picking is concerned. And yes, the stock had corrected very sharply. I think from 6,200 levels all the way down to 4,771. And this is something that Ashish ji continues to like as far as markets are concerned in the IT space. Okay. Let's shift focus and look at capital goods and look at the cement space, Ashish ji. Cement was supposed to be a big beneficiary of the domestic demand, and of course the fact that it is not linked at all to the global problem of tariffs that we are seeing. Anything that you like in cement which you may have added after Mr. Trump's rhetoric on tariffs?
So we have been continuously holding Ultratech cement in our portfolio, Shelji, and this is a trade which which we have maintained in our portfolio for last 2.5 years time frame since the time the inception of the portfolio, and we continue to believe this has got some serious leadership position because the kind of consolidation this entire industry is witnessing, players like Ultratech, Shri Cement becomes a natural beneficiary. Second, we believe demand uptick is there. We have seen 35 to 40 rupees per bag jump in the prices of cement in South. There's a uptick in North market as well. So we believe that there's a demand uptick, there is a price uptick which is being witnessed, and this is going to clearly benefit players who have some serious consolidated position where there's an operating leverage because the cost optimization is good. So I think the leadership position it lies with stocks like Ultratech, She Cement. To some extent, we believe Ambuja and ECC would also be a good beneficiary of this trend. So overall, we have been very constructive on this overall cement space. Apart from that, building materials is one space which is looking very promising, and we continue to hold APL Apollo in our portfolios. We think this stock is also consolidated for last 3 to 4 years time frame. Because of that, the PE multiples have come to a reasonable level, and the earning growth momentum is going to be strong. So keeping this in mind, APL Apollo is also looking very interesting. But as a disclosure, we hold this stock in our portfolio, and this is not a recommendation to buy or sell. But we believe that in the looking into the short term, medium term trend, it looks like APL Apollo looks quite interesting.
Okay. Ashiji, anything that you have exited from in the last 1 month or so, given
so as I mentioned,
advantage did you take of the rally that happened over the last 40 days, sir?
Yeah. So as I mentioned, we have reduced some exposure in the small and mid cap because when this rally came, we had some overweight positions, so we reduced them and shifted it to large cap. And this is individual stock specific rather than a sector opportunities which we had done. Yes, definitely IT was something which we had in our portfolio, although not overweight position, but there were some positions we have reduced those positions also and restricted to 1 or 2 names like Persistent and Coforge, but reduced overall IT as a bet. Increased allocation to some extent to banking, financial, and also to PSU banks, because at some point of time we had exited PSU banks, and at lower levels we have tried to accumulate PSU banks because we believe the valuation comfort is good. The overall systemic loan growth is going to be in the range of 13 to 14%, and we believe that RBI's measures will definitely benefit overall banking and financial. And because of the valuation comfort, we believe PSU banks would also be good beneficiary of this trend. So we have tried to shift it some positions to PSU bank ETF also in our portfolios.
Okay, what are the PSU banks that you purchased, sir?
So, Shelji, we try to play PSUs through first, obviously, SBI is a position which we continue to hold. This is typically a kind of buy and hold in our portfolio because, the nature of earning growth, the kind of subsidiaries valuation, all those gives a lot of comfort. So, SBI is something which we continue to hold in our portfolio. As a tactical bet, we have entered into PSU bank, these ETF, rather than taking individual bets on individual PSU banks. So we believe that to play this entire theme, it is always better to play a ETF. We had done it in the past, and we continue to believe that these kind of individual thematic opportunities, if you have ETF exposure available, then better to play that. So we have bought PSU bank these ETF to ride this entire trend in the PSU banking space.
क्या बात है आशीष जी, आपने तो पुरानी यादें ताज़ा करा दी 3-4 साल पहले की. I think the first buy on PSU ETFs in the banking space came at about 28, I think 23 rupees.
23 rupees,
if I remember rightly. That
yes.
was 4-5 years ago.
Yes.
And क्या बात है, मेरे को भी याद है. And then of course it went into three digits if I'm not wrong.
Yeah, yeah.
And now
We
you are
made some.
back into it again.
Yes.
So that's a great trade to talk about. Okay. A strong view on PSU banking stocks via the ETF play. Let's dig a little further, Ashish ji, and look at the domestic space in the auto sector and the real estate space. We've had a series of rate cuts by the RBI, and of course, demand for quality stocks is on the high, especially those like Bajaj Auto and Hero Motors and Tata Motors that have corrected substantially. Have you picked any one of these three over the last 15 days or so? Or what is your view on the auto space?
So auto, we are very selective, Shelji. We believe that the leadership position is being held by two players in the two-wheeler space. One is Eicher Motors, which is more play on the premium side. And on the EV segment, we believe TVS Motors has managed to gain market share from players like Bajaj Auto and Hero MotoCorp. So we continue to, have a positive view on both these names. And these are the stocks which we continue to, maintain as our positions. Apart from that, in the four-wheeler, I think M&M, Mahindra and Mahindra is something which looks promising to us. So I think these are the names which we hold in the overall auto basket. But as far as weight is concerned, I would say the overall positioning is neutral. It is not very significant overweight position because we think that the discretionary spending will take some time for the recovery. So maybe these stocks have done reasonably well. So we don't want to over allocate at this point of time. So this is the reason. But I think broadly, Eicher Motors, TVS Motors, and Mahindra, these are the three names which we like overall on the autos on the auto basket.
When you view your overall portfolio, Ashish ji, from 35,000 feet down, when you look down at it, what are the overweight sectors, and what are sectors that you are just avoiding, like IT?
So as far as overweight is concerned, we are significantly overweight in banking, financial, capital markets as a theme, defense as a theme, electronic manufacturing service as a theme, and as I mentioned, CDMO and healthcare. These are the opportunities where we have some overweight positions in our portfolio. What we are avoiding, obviously, we are avoiding IT, we are avoiding metals, we are avoiding to a great extent plays like textile and all, because wherever we have some serious global uncertainty prevailing, we want to avoid at this point of time. We want to focus more on domestic consumption, domestic manufacturing themes which are linked to the domestic growth, consumption. These are the themes which we continue to ride upon. And I think IT, or maybe to some extent chemicals or textile, metals, these are the themes which we are completely avoiding or say having significant underweight position in our portfolios.
Fair point. That's a very sensible way to look at it. And Ashish, what would be the overall weightage of large caps in your equity portfolio versus small caps and mid caps, and what is the level of cash? Suppose you have 10,000 rupees as the overall value of your portfolio. How much in large caps, small caps, mid caps, and how much in cash?
So generally, we don't try to be too much on cash. The reason being, we believe that mostly we try to realign within portfolio rather than creating too much of cash. But yes, 2-3% cash is a different thing. But we don't go to a situation where we create 15% cash in our discretionary portfolios. So that's not something we do. We have increased our allocation to large cap. So if to say so, we do it like this way: that what is the overall weight of Nifty 200 in our portfolio. If I had to look into that picture, then almost 63% of our portfolio at this point of time is in NSE 200. If I look into Nifty 50, it's close to 42% of our portfolio is into Nifty 50. So that's how we would like to, look into it. And beyond Nifty 200, we have close to, 40% kind of weight in our portfolios. So this is the broader structure. Within this, as I mentioned, banking, financial, consumption, defense or manufacturing, and EMS. these are the themes which we continue to hold as an overweight position in our portfolios.
Okay. Uh, your view on Bajaj Finance. The reason why I ask is that about 5 years ago, it used to be your favorite stock, and you played the rally very well. Is Bajaj Finance entering a new orbit? We have a stock split and bonus due. I think on April 29th is when the ratios will be decided. Given the liquidity in the NBFC space, and of course a 5 year absolute net no return, how do you see Bajaj Finance now? Is it headed for higher orbit? Do you have it in your portfolio?
Definitely yes, and I believe so. That's the reason we have created. I would like to say that in the last 3 months, we have added some serious positions into Bajaj Twins, both Bajaj Finance and FinServ. These are the stocks which we have added a lot in the last 3 months. Apart from that, even Cholamandalam and Shriram, you're aware that we have discussed this a couple of times, that these are the stocks which we continue to hold in our portfolio. So in the NBFC, these are the 4 names which we continue to hold. But as far as Bajaj Twins are concerned, we believe this is definitely headed for some serious rally. It has consolidated for good 4 or 5 years. At one point of time, it used to trade at 7 times price to book. That valuation comfort has re-entered, because when the stock has hit was consolidating, but the earning growth momentum picked up. It resulted into 4.5 times price to book. So I think there is a valuation comfort which is there in Bajaj Finance and Bajaj FinServ. Apart from that, I think this bonus and split, this is also going to be at least sentimentally positive for the stock. So overall, our belief is this year, we are going to see some serious outperformance coming from Bajaj Finance, Bajaj FinServ. Apart from that, Cholamandalam and Shriram will continue to do well in the overall banking and in the NBFC space.
Okay. Ashishji, this is a broader question. Do the number of stocks in your portfolio remain the same as they were maybe in September 2024? Or have you cut down on the number of stocks and increased individual weights and sizes?
So yeah, we have reduced to some extent the number of stocks, but importantly is we have increased the allocation to weights where we believe that the structural trend is reversing. For example, if the overall BFSI used to be, let's say, 20 to 23% at some point of time, today it is close to 37%. So that's the kind of weight increase we had done in the entire BFSI space. Let's say if the capital market theme used to have 4% kind of allocation, today it is close to 7-8% kind of allocation in our portfolio. So we have increased allocation wherever our conviction has increased. Although number of stocks might have reduced little bit, but the incremental allocation to existing stocks have increased a lot.
Okay, so that's how a concentrated portfolio has resulted in the past 6 months. Ashishji, how do you feel about the market now? We've had a 16-17% correction on Nifty, about a 30-35% correction in IT, 28-29% correction in smalls and mids on the index itself. Do you think now markets have more or less come in the buy zone?
I think so, Shelji, and we are not just looking into Nifty and Bank Nifty as a data. We are also tracking global data points. For example, dollar index has seen a correction from 109 to almost 98, clearly indicating that dollar is losing its value against a lot of major currencies. Clearly benefiting even a rupee. Rupee has seen some strength in the last couple of weeks. This will be supportive for FII inflow into our market. This is also getting reflected in the form of kind of money flow which has started happening from FIIs. So my sense is the dollar index, a reversal in dollar index is a very important trend which is going to be positive for Indian market. Strength in rupee is going to be very positive for Indian market. As I mentioned, since 2021, banking and financials was underperforming, and this has started to outperform in the last 1 month. So clearly a leader which has got 37% weight is trying to show some strong outperformance, clearly indicates that it is going to be positive for the broader market. And one very interesting data is we have created a ratio chart where we have tried to look into the data point of Nifty versus US markets. And on that data front, we have seen in the last 1.5 months, there is a clear outperformance which is visible from our market as compared to US market. So this is kind of a clear sign that emerging market, particularly India, is going to outperform US markets. So this will also help in further inflow of capital to Indian markets. So all in all, my sense is, as I mentioned, 23,500 is something which we are watching very closely, because we have day before yesterday we have crossed 200-day moving average, and since it has crossed after 4 months of consolidation, I think that 23,500 is going to act as an important support. If we continue to hold it, then there's a good possibility of a further outperformance in days to come, and I'll not be surprised if a new all-time high gets hit in this financial year.
Okay, a couple of last questions, Ashish ji. Your view on interest rates, and finally gold. 1 lakh rupees a tola. How are you observing the sheer speculative activity that's happening in gold? No deliveries are taking place. Jewelry shops are empty, and gold is now purely a speculative asset. How do you analyze it, and your view on interest rates?
So, Shalji, what is more interesting is, as I mentioned, we have to watch this data of dollar index very closely, because dollar index has got some negative correlation with gold. So if dollar index starts to correct, this is going to be positive for gold. That's one data point. Second point is, we are seeing central banks across the globe are adding gold in this scenario, because they are a little concerned about any de-dollarization trend which happens, and this will lead to dollar losing its value. If it happens, then again gold will become a natural hedge, and that's the reason a lot of central banks are buying. I completely agree. Retailers are avoiding at this point of time buying gold because of gold hitting an all-time of almost 1 lakh rupees a tola. But my sense is, because central banks are buying, it is into some very serious uptrend, but definitely a little speculative in the last couple of days. So definitely and at this point of time, entry is not a very good. This is not a good entry point. Maybe some correction, some profit booking, but if there is any good profit booking which comes into gold, again it will become an interesting buy zone. So rather than buying at current levels, buy on dip would be a strategy for gold. Even silver, which has underperformed gold for last couple of months, I think is going to see some rally. So my sense is silver is going to show some good strength in days to come. So this is the overall view. We, as an asset allocation, we believe that 10 to 12% of overall allocation should be on this precious metals at this on an overall portfolio basis. As far as interest rates are concerned, I think the trajectory looks very accommodative, and it looks like interest rates are going to come down. And this is the reason why banks are showing so much good strength. So my belief is interest rates are going to come down, and this will help overall banking financial as a space because of reduced interest rates.
Right. With that, Ashishji, we'll call it a day. Thank you so much for such wisdom-laced practical advice on how the markets are likely to pan out, and especially sharing your own details as far as the portfolio makeup is concerned. Thank you for your time, and here's wishing you a great 2025 ahead. May the returns be bountiful for you and your investors.
Thank you.
With that, ladies and gentlemen, we'll call it a day on this show. Ashish ji is overweight on NBFCs, private sector and public sector banks. Public sector banks have been tapped through the CPSE PSU banking ETF. Has a strong position in Apollo hospitals, likes Divi's and Lupin. Has again a strong position in all EMS shares, as also defense, and in particular have raised stakes in Bajaj Finance and Bajaj Finserv. Ashish ji is avoiding IT except for Persistent Systems, where he continues to hold his position. The portfolio is oriented towards large caps, and of course there is a very strong view that is coming in that we just might see a fresh high on the Nifty in the remaining part of 2025. Thank you for watching us. I hope you enjoyed the conversation as much as I did.
and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is the earnings special conversation that we are going to be having on